Imagine waking up tomorrow to see the price of your next iPhone rocket by hundreds of dollars, seemingly overnight. Now picture this: the world's most valuable tech giant, Apple, forced to choose between rebuilding its entire supply chain in the United States or facing a financial hit worth billions. What if one presidential tweet could flip the global smartphone market on its head? Welcome to the new battleground where politics, technology, and your wallet all collide. This isn't just a story about tariffs. It's a dramatic, high-stakes power play that could reshape the global tech economy, influence millions of jobs, and decide who really controls the future of innovation. Stay tuned, because what happens next could affect all of us more than we think. It all started, as so many seismic moments in tech history do, with a few pointed words and a signature in the Oval Office. On a brisk morning in May 2025, President Donald Trump strode to his desk flanked by cameras as he signed a new wave of executive orders aimed at boosting American industry. But this time, the spotlight wasn't just on nuclear power. The real bombshell came with his comments about Apple, the undisputed titan of consumer electronics. Trump was direct, even blunt. If Apple wants to sell iPhones in America, he insisted, those phones should be made in America, not India, not China, not anywhere else. And if Apple continued building its next wave of plants on foreign soil, he'd slap a 25% tariff on every iPhone imported back to the US. That's the way it is, he declared with trademark finality, making it clear that for Apple, new rules of the game were being written on the fly. On social media, the message was even sharper. I expect their iPhones that will be sold in the United States of America will be manufactured and built in the United States, not India or any place else. If that is not the case, a tariff of at least 25% must be paid by Apple to the US. Thank you for your attention to this matter. The world took notice. Apple, already hard at work expanding its operations in India, suddenly found itself at the crossroads of global economics and American politics. A crossroads that could cost it billions or force a seismic shift in how its flagship products are built. What's at stake here isn't just about where your next iPhone is assembled. To understand the gravity of Trump's threat and why it's sending shockwaves through Silicon Valley and Wall Street alike, we need to step back and look at how Apple became the world's most profitable consumer tech company in the first place. Apple's story is a masterclass in global supply chain management. For over 2 decades, Apple has relied on a finely tuned web of factories, suppliers, and logistics partners spanning Asia, especially China, and increasingly India and Vietnam. This global network has allowed Apple not just to keep costs low, but also to ramp up production at breathtaking speed. It's why, every year, Apple can release millions of meticulously crafted iPhones, iPads, and MacBooks around the world, on time, without a hitch. But why the global approach? First, it's about cost. Manufacturing in Asia, especially China and India, allows Apple to tap into massive labor pools at significantly lower wages. The average wage for a factory worker in India is a fraction of what it would be in the US, and local governments often provide generous incentives to attract foreign investors. Apple's main assembly partner, Foxconn, has just invested $1.5 billion more into expanding its Indian production lines, a clear signal that Apple's Asian strategy is only deepening. There's also expertise. Over decades, Asian factories have honed a culture of precision manufacturing, critical for the tiny tolerances and high-quality standards demanded by Apple. Complex components, screens from South Korea, chips from Taiwan, semiconductors from Japan, all converge at a handful of sophisticated plants, some over 1 million square feet in size, humming 24/7 to satisfy the world's appetite for the latest tech. Shifting that intricate ballet to the US, it's not just a matter of building a new factory, it's an enormous, multi-billion-dollar gamble. According to a recent UBS report, moving even 10% of Apple's supply chain to America would require at least $30 billion and up to 3 years of intensive restructuring. That's before even considering the cost to retrain a US workforce or the time needed to develop local suppliers for more than 1,000 individual iPhone components. And yet, the political winds in Washington are shifting. On stage in Doha just a week before his executive orders, President Trump laid out his reasoning. I don't want you building in India. You can build in India if you want to take care of India because India is one of the highest tariff nations in the world. It's very hard to sell into India. Trump's logic? If India blocks US companies with tariffs, why shouldn't America do the same to them, or to US companies that set up shop there? In the age of economic nationalism, anything is possible. But at Apple's Cupertino headquarters, CEO Tim Cook and his team face a puzzle for the ages. Build at home and face spiraling costs, or double down on Asia and risk harsh new tariffs, angry American consumers, and possible political backlash. The stakes are enormous. Counterpoint Research estimates that by 2025, India could produce up to 30% of all iPhones globally. More than 25% of the iPhones sold in America next year could have "Made in India" stamped on the box. It's a classic collision between the economic logic of globalization and the rising tide of protectionist politics. As Tarun Pathak, research director at Counterpoint, puts it, this is a familiar Trump tactic. He wants to push Apple to localize more and build a supply chain in the US, which is not going to happen overnight. Making in the US will also be much more expensive than assembling iPhones in India. Even if Apple wanted to play along, it's not a switch you can just flip. David Vogt, a UBS analyst, breaks it down further. The 25% tariff is a jarring headline, but only a modest headwind, reducing Apple's annual earnings by an estimated $0.51 per share. That might sound manageable, but in the high-stakes world of Wall Street, every cent counts. A sustained earnings hit could spook investors, leading to sharp drops in Apple's stock price and potentially triggering a domino effect across the entire tech sector. Dan Ives, tech analyst at Wedbush, doesn't mince words. Apple producing iPhones in the US is a fairy tale due to the complexity and cost of replicating the Asian supply chain. The costs aren't just about building shiny new factories. The components themselves, hundreds of them, are sourced from all over the world, assembled with military-like precision, and shipped on a just-in-time basis. To duplicate that in the US would mean not just billions in investment, but years of trial and error, with no guarantee of success. Meanwhile, everyday Americans would likely feel the pinch. Wayne Lamb, Tech Insights analyst, paints a grim picture. Manufacturing iPhones in the US is absurd and not economically feasible in the short term. It could double iPhone prices. Imagine paying $2,000 for a new iPhone, just because of a 25% tax slapped on foreign-made devices or the higher costs of moving everything onshore. That's enough to give any consumer sticker shock. But national security and economic resilience are powerful motivations. Scott Bessent, the new Treasury Secretary, argues, bringing back precision manufacturing to the U.S., especially in semiconductors, is vital for national security and economic resilience. The recent chip shortages have shown how vulnerable even the mightiest tech companies are to disruptions in overseas supply chains. If the iPhone's heart, a custom Apple silicon chip, can't be made reliably, the whole system grinds to a halt. That's why Apple has already begun to lay some groundwork. In Arizona, a new TSMC semiconductor plant is under construction, signaling a first step toward US-based chip production. And in the Midwest, Apple is building a massive 250,000 square foot server facility to support its next-generation AI features. These aren't iPhone factories yet, but they're start points, and they hint at a future where "Made in America" is more than just a slogan. Still, the prospect of Apple fully localizing iPhone production in the US remains remote. As Brett House, an economist at Columbia, warns, tariffs on iPhones would increase consumer costs by complicating Apple's supply chain and financing, negatively impacting American consumers. For now, the calculus remains. Either absorb the costs and watch profits take a hit, or risk passing the pain on to consumers in the form of higher prices. Both options are politically fraught, and either one could shake Apple's standing as the most valuable company on Earth. So what can Apple do next? 4 possible scenarios are being hotly debated in boardrooms from California to Wall Street to New Delhi, and none of them is easy. First, Apple could double down on its Indian expansion, ramping up investment, negotiating deals with local regulators, and hoping the infrastructure can keep up with its ambitious plans. Tarun Pathak of Counterpoint Research notes, India has enough capacity to potentially meet all US iPhone demand in the future, but the ecosystem needs to be ramped up. That's easier said than done. India's logistics, ports, roads, power grids still lag behind China's, which could create costly bottlenecks. Second, Apple could simply absorb the cost of tariffs, as analyst Ming-Chi Kuo suggests. It's more profitable for Apple to absorb a 25% tariff than to relocate iPhone assembly to the US due to existing supply chain efficiencies. But taking that hit would reduce profitability, rattle investors, and limit Apple's ability to invest in the next big thing, from AI to AR glasses. Third, Apple could try a hybrid approach. maybe assemble high-value components like semiconductors and motherboards in the US, at facilities like the new TSMC plant, while still relying on Asian partners for final assembly. It's a compromise that could blunt the impact of tariffs, but it would require massive government support, tax breaks, subsidies, and workforce training on an unprecedented scale. And finally, the US government itself could try to sweeten the deal by offering Apple and other manufacturers a package of incentives so attractive that it becomes less painful to move jobs and factories home. But in a polarized political climate, is there enough will to make that happen, especially if it means taxpayers footing the bill? As the clock ticks, each scenario presents a dizzying mix of risk, cost, and uncertainty. Apple's decision will reverberate not just through its own balance sheet, but across the wider world of consumer tech. Will Trump's tariffs force Apple to reimagine its entire business model, or will the world's most valuable company find a way to turn adversity into opportunity? And yet, one question looms above all the others. If Apple bends to Washington's will, can it protect its global dominance, or will the move backfire, opening the door for rivals and changing forever the way our gadgets are made? Now let's fast forward and picture Apple at the crossroads, one of those rare moments where decisions ripple out far beyond just a single company or even a single industry. Trump's 25% tariff threat is more than just a political maneuver. It's a fork in the road for American tech, global trade, and you, the consumer standing in the phone aisle, wondering what this all means for your next iPhone purchase. So what does the future actually look like if these tariffs become reality? Let's break down the possible scenarios, dig into the real risks and the hidden opportunities waiting for Apple, and by extension, all of us. First up, imagine Apple doubles down on its overseas manufacturing, mostly in India and a growing presence in Vietnam. This isn't just a theory, it's already happening. Tim Cook has openly said most iPhones, iPads, and even Macs sold in the US now originate from India and Vietnam. The benefits? Lower labor costs, diversified risks away from China, and a chance to hedge against future geopolitical surprises. But there's a catch. If Trump's tariffs hit, Apple faces a gut-wrenching choice: eat the cost, slash its legendary profit margins, or raise prices for American buyers, possibly by hundreds of dollars per device. UBS estimates that even just absorbing the tariffs would knock about 51 cents per share off Apple's annual earnings. That's billions of dollars lost, a shock severe enough to spook Wall Street. And if investors panic, the result could be a stock slide, and Apple's valuation, one of the world's highest, could take a serious bruising. So, what if Apple caves to political pressure and shifts some production to the US? This sounds patriotic, but experts call it fantasy, at least for now. Dan Ives, a veteran Apple analyst, warns that replicating the highly efficient Asian supply chain here would cost up to $30 billion and take at least 3 years, minimum. And that's just for shifting 10% of output. Beyond the raw investment, there's the workforce. Making an iPhone isn't a simple assembly line task. It's a ballet of high-tech precision involving hundreds of suppliers and millions of intricate parts sourced from Korea, Japan, Taiwan, and more. As Wayne Lamb of Tech Insights puts it, manufacturing iPhones in the US is absurd and not economically feasible in the short term. It could literally double the price of a new iPhone. And if an iPhone suddenly costs $2,000 or more, would Americans still line up overnight for every new launch? Now let's throw a curveball into the mix: government incentives. Suppose Washington offers Apple a buffet of tax breaks and subsidies to sweeten the massive investment required to boost American manufacturing. This could offset some of the higher labor costs and make a partial U.S. supply chain more realistic. There's precedent. Just look at TSMC's state-of-the-art chip plant in Arizona, which already feeds some chips into Apple's ecosystem. But again, this is a marathon, not a sprint. Building a supply chain from scratch in America would require not just money, but massive investments in skilled labor, infrastructure, and logistics. It's the kind of transformation that rewires a country's industrial DNA, not next quarter's earnings. Finally, the wild card, the law itself. The very foundation for these tariffs, the IEEPA, is under legal challenge. Can the U.S. government really single out a company like Apple for punitive tariffs? That question could tie up the courts for years, casting a long shadow of uncertainty over every business planning session in Cupertino. So, what's really at stake here? Let's get personal. The ripple effect could hit every one of us. If you're in the market for a new phone, you might soon face sticker shock. But it's not just about price, it's about innovation too. If Apple's profits take a hit, that's less money for R&D, fewer breakthroughs, and maybe slower progress on the tech that shapes our lives. Smarter cameras, better batteries, maybe even the dream of Apple glasses or a true AI assistant in your pocket. For the broader economy, tens of thousands of jobs hang in the balance. Apple's suppliers, retail workers, and even app developers could all feel the pinch. And let's not forget, a more expensive iPhone doesn't just hit American consumers. It echoes around the globe, since Apple sets the pace for the entire smartphone industry. But with risk comes opportunity. Experts see a silver lining. If Apple is pushed to localize some production, it could trigger a renaissance in American advanced manufacturing, especially for critical technologies like semiconductors and AI infrastructure. Treasury Secretary Scott Bessent says, "Bringing back precision manufacturing is vital for national security and economic resilience." Imagine a world where US-based Apple plants, not just server farms but real assembly hubs, create high-paying engineering jobs, ignite new clusters of innovation, and maybe even inspire other tech giants to follow suit. That's a tantalizing vision, albeit 1 year away. So, what's the most likely scenario? According to industry consensus, a blend of all the above. Apple will keep investing aggressively in India and Vietnam, extracting every bit of efficiency from global supply chains. It'll absorb some of the tariff pain, maybe pass a little to consumers, and lobby hard for government breaks. Partial US-based production, especially for the most sensitive parts, could slowly ramp up with help from Washington. And all the while, the legal fight over tariffs will rage in the background. Now let's zoom in on what this all means for you, the viewer. First, if you're an Apple fan, expect the unexpected. Prices may nudge upward. You'll start to see Made in India or Assembled in USA labels on your next box. Tiny shifts in where your device is built could echo in everything from app availability to repair options. And if Apple's margins shrink, it might cut back on trade-in deals, AppleCare perks, or those generous student discounts. But you're also living through an inflection point, watching in real time as the world's most valuable tech company writes a new playbook for navigating geopolitics and globalization. It's a front-row seat to history. And more than that, it's a crash course in how trade policy, corporate strategy, and consumer choice are more interwoven than ever. Here's a practical takeaway. Stay informed and nimble. If you're planning a big Apple purchase, consider timing. Buy now, and you might avoid the next price hike. Or, if tariffs loom but are delayed by legal wrangling, you might get a temporary reprieve. Follow the news, not just on product launches, but on policy shifts, legal battles, and the slow-motion dance between Apple and Washington. And if you work in tech, supply chain, policy, or maybe you just care about American manufacturing, there's never been a better time to sharpen your skills. The coming years will see a surge in demand for engineers, logistics specialists, legal experts, and supply chain wizards who can stitch together global and local operations seamlessly. Trends in tech are increasingly shaped not just by innovation, but by the fine print of trade agreements and executive orders. It's a new world where even the most iconic product, the iPhone, isn't immune from the tides of international politics. So, let's circle back to the burning question. Can Apple maintain its dominance and keep consumers happy, or will political pressure force a costly transformation with unpredictable consequences? The answer, as with so many things in tech, is complex. Apple has built its empire on the bedrock of a hyper-globalized supply chain and relentless innovation. These tariffs threaten both. But Apple's vast resources, deep relationships, and almost unrivaled ability to pivot give it an edge that few rivals can match. In the short term, you're likely to see modest price increases and more frequent headlines about supply chain tweaks. Apple won't abandon its global roots overnight, and the odds of every iPhone being US-made anytime soon are slim. But in the medium to long term, expect Apple to play all its cards. Ramping up alternative manufacturing in India and Vietnam, negotiating hard for government incentives, and even teasing limited US-based assembly on flagship models to appease political critics. Crucially, Apple's biggest advantage is its brand loyalty. Most consumers, when faced with higher prices, will grumble, but keep buying. The result? Apple stays on top, even if margins get squeezed. But if the trade war escalates or supply chain shocks hit harder, even Apple's moat could be breached. That's the real risk, a world where Apple's dominance is no longer a given, and rivals, Samsung, Google, or even up-and-coming Indian or Chinese brands, start to nibble away at its lead. But here's a secret few insiders will admit. The political theater of tariffs is often as much about posturing as actual enforcement. CEOs and presidents make bold threats, But the global economy is a delicate web. Too much disruption, and everyone loses. Politicians, companies, and yes, voters. That's why many experts, off the record, whisper that some kind of backroom compromise is likely, with Apple making symbolic moves stateside while keeping the engine of global production humming. So, keep your eyes open for price changes, for made-in labels, and for news of Apple's next big investment. Whether you're an investor, a techie, or just an iPhone user with an eye on your wallet, what's happening here is more than just business. It's a masterclass in modern globalization, right on your screen. If you found this deep dive insightful, let us know in the comments. Where do you stand? Should Apple bring jobs home, even if it drives up prices? Or is the global supply chain simply the cost of innovation? Hit like, subscribe for more tech breakdowns, and turn on notifications so you never miss a story where business meets politics, meets your everyday life. And here's a final secret fact. While all eyes are on tariffs and supply chains, Apple's quietly building a 250,000 square foot server facility in the US, set to supercharge its AI and cloud ambitions. The next generation of Apple innovation